Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium.
LME 3-month copper. A bullish piercing line pattern yesterday, and I can't make my mind up which of the following three reasons was why the market chose to make such a pattern. Was it 1, the dip back below the upper trend line, currently at 89.34, of the broken upper bull channel line, which is highlighted in dark blue on my daily chart? 2, the dip back below the 50% Fibonacci line of the 2022 move at 8900? Or 3, the approach towards the rising short medium moving average, currently at 87.45. I'm of a mind to think that all three played their role, but I would note the effect of the broken upper bull trend line on this especially. We still have overhead the primary target X in the 95.63 area, which was close enough to almost be reached in mid-January, and a secondary harder to reach target X1 in the 99.83 area. However, the construction of a rounded top over January has tempered the opportunity for such an immediate move higher. Yet I had also recently laid out the situation for this pattern to work. We should see a halt, followed by a move up and through the previous highs of last month, if this is to be a bullish variation of the rounded top pattern. If this continues to be the case, then watch out for a build-up of bullish steam in the next few days or weeks. Below the current support, we have a free zone down to the rising short medium moving average and the April 2012 high at 86.65, plus the 50% Fibonacci line of the October 2020 to March 22 move at 85.56. Further down, things start to get quite congested. Over all of this is the realization that we had a monthly key reversal up in January. So far today, a dip to the broken upper bull channel line, followed by a move higher, but seemingly stumbling when approaching the GAN number of 9,000. LME 3-month aluminium. A second bearish black crow yesterday and a follow-on low to the previous session's immediate countering bearish opening black Marubozu. Prices made a second consecutive close below the combination of the rising short medium moving average, currently 24.85, the middle time, currently 24.89 of the late October last year to early January bullish shift pitchfork, and finally the declining long moving average, currently 24.55. It was also a first close below the lesser Fibonacci line at 24.41, and perhaps more importantly, below the lower time, currently at 24.39 of the late October last year to early January bullish Andrews pitchfork. The next support below is now the slowly rising medium moving average, currently at 23.98, which is in amongst a compacted zone of congestion right now from mid to late December last year between 23.63 and 24.18. Going back to the pitchforks for a moment, I still have not highlighted either one, as I'm still unsure which is the more dominant right now. Instead, I'm more interested in the time crossovers between the two, the first of which is due tomorrow, and the second will be on the 1st of March. As any of you who follow my thoughts will know, that on such times as these crossovers, you should look out for one or more of the following: a change in trend, a reinforcement of an existing trend, overall volatility. I'll wait and see what happens after the first of these two crossovers before committing further to any or either pitchfork. Finally, there is the idea of the January to date rounded top. This has merit, but the issue is that the market will need to drop down as far as the June 2018 high at 23.53 or even the October 2018 high at 22.67 before we see a possible halt, thus being below all the moving averages and probably all the times of the pitchforks. This is something to watch out for. So far today, a test up to the combined lesser Fibonacci line and breached lower time before coming back down, though not as far as the medium moving average below. I have a suspicion that the move up today may have been an ammunition gathering exercise for a possible attempt lower. Caution.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.